Welcome to Mastering the Numbers, your go-to podcast for a deep dive into the world of business and entrepreneurship. I'm your host, Joe Mallo. Join me as I sit down with successful business owners to uncover their journeys, learnings, successes, and future plans. From market trends to personal stories of triumph, Mastering the Numbers delivers invaluable insights to fuel your own entrepreneurial spirit. So grab a seat and get ready to be inspired.
All right. Hello, everyone. This is Joe Mallo with Elite Edge Consulting Group, and welcome back to Mastering the Numbers. We are powered by Focal Point Business and Executive Coaching. My guest today is Josh Hawman. He's the founding partner of Prodigal Group in Cleveland, Ohio. Josh, I really appreciate you being on today.
Yeah, absolutely. Thanks so much for having me, Joe.
For sure. Can you tell the audience a little bit about Prodigal Group?
Yeah, sure. Prodigal Group is in primarily, well, really domestic and international strategies. So with a focus on fixing and flipping, although we do a lot of different things, creative options as well. And so to put that in more digestible terms for the listeners, we invest in all sorts of real estate deals with the emphasis on the fix and flips. And we're helping currently 90 plus investors and clients do their first or next deal in 6 to 12 months, completely guaranteed by our company as well. So a couple of things that we're working on right now. Currently, we're about 6 people strong on the whole team and been doing this for about 5 years in real estate currently. So we've done deals in about 4 different countries, and we're taking on Bogota, Colombia right now. I'm raising for an opportunity we got down there. So that's the unique part of our business is I've sold off 5 deals here in Cleveland this year so far, but we also span, the whole globe really from Indonesia to the UK to Australia to, now going down to South America. So yeah, it's a wild ride. It's been pretty fun so far. Excited to see where we go from here.
Yes, it sounds challenging probably to be in that many different countries.
Yes. Yes, it is. We've been setting this opportunity up for quite some time. So it's been about 6 months of pre-work and everything going into it. And we've got some boots on the ground contacts, which is like the most important thing is if you're going to go into a new market or pursue a new opportunity, whether it be a new business that you want to start or a new investment strategy, a new location, any of that kind of stuff. I think it really just comes down to understanding the fundamentals and then also having a partner, a mentor figure, someone that can really help you and be there along your side during that whole process. Because when you go to take on something, it's always unknown, it's always crazy. That's just how business goes. But there's a lot to learn,
Yeah.
and it can be really fun and profitable as well.
Yeah, I think it's always important to have a mentor of some type. I've had one for over 17 years, and I don't know if I'd be where I'm at today without a
Yeah.
lot of his wisdom over the years. So when
Yeah.
so when you talk about fix and flip, are these is it residential? Is it commercial? Are they skyrise buildings? I mean, what type of
They're all
fix and flips?
residential. Yeah,
All
for all the
residential?
flips that we take on, it's all residential. Yeah. So this one in Colombia that we're doing is a 6-3. So that means 6 bedrooms and then 3 bathrooms. So
Mhm.
they're all pretty much houses for the most part. Done quads, triplexes, duplexes, single families, all that kind of stuff. And then in another business that I'm operating, I've also done a lot of net lease acquisitions, and that would be commercial. Things like Advanced Auto Parts, Family Dollar, Dollar General, Pet Veterinary Hospitals, Walgreens. STNL is what it's called. So single tenant net lease. And those
Yeah.
you would just rent out for cash flow. I haven't done development or re-tenanting for those type of things, which can typically
Right.
be in the real estate world appreciation plays. But yeah, I haven't done too much development in terms of commercial, but plenty in the residential space. So
Great. Well, what prompted you to start your own business in this industry?
I think for many entrepreneurs, part of it's nature and part of it's nurture. And so some people innately have that, and other people develop that entrepreneurial bug or really that desire to start their own business. And so I've found in my case, it's a bit of both. And I think many other people, your listeners, would feel the same. So for me, it started with lemonade stands and trading Pokemon cards growing up. And then by the time I was 8 or 9 years old, we moved to a new neighborhood and I started my first business, and it was a home care company called Good Neighbor Home Care. And I launched this company because my current annual salary as a 9 year old was about $200 for birthdays and Christmas. And
Yeah.
there was a lady at our church who was looking for someone to basically water her plants and take care of her cats on a week that she was going on vacation. And I was a pretty enthusiastic and high energy 9-year-old whose parents were very happy to get out of the house. And I was like, okay, well, I'm happy to go and take a look at, your plants and water them and, take care of your cat and everything. And I did that. And over the course of that week, I made $50, which was a significant sum when you're 9 years old. I could buy a lot of Legos. And so,
Right.
so I stuffed it under a box under my bed for about a week. And then I was like, wait a second, I just made $50. Like this Star Wars Lego set that I want is more than that. Like I've already, I want to already buy another one and I'm not going to have the money for this set. So I ended up going back to like the Kasuniks who I served initially. I was like, hey, are you guys going to go on vacation again? And they were like, what? And I was like, yeah, like I'd love to take care of your animal and your garden again. And they're like, no. I was like, okay, well, what else could I do? So I took that $50 and I went to like a Target or a Staples and I got these flyers and pamphlets. And I had my parents and I wrote out and printed out all these different things like service offering of what we could do. And I would go around my neighborhood at 9 years old and door knock and slide these flyers in people's mailboxes if they didn't answer the door. Pretty much just introduce myself and say, hey,
Yeah.
I can do weeding, I can do, anything in the yard that you would need. I can take care of your animals. I can do basically anything and just provide like a service for them. And over the course of about a decade, I scaled that to a six-figure company by the time I was 17 and went off to college to go study economics. So that was my introduction to it. And at this point, I've had about 7 different businesses that I've trial and errored my way through. Some successful, some meh, just okay. And so how I landed in real estate was I was an equity researcher. And so I was always interested. I've been studying the stock market since I was 16 and investing in the stock market since I was 16. And I thought I wanted to go into investment banking. But after just some experiences with that, so a lot positive and some negative as well, just like any business or anything
Right.
that you're going to pursue in life. I just felt like it wasn't my calling and it wasn't truly like my passion. And so I began to search for another route and I found real estate investing. And after I bought my first property and started getting some cash flow in every month, I was like, I could just see a clear scalability factor in this and could clearly see how that would work. And so I fell in love with it and yeah, never looked back since.
That's fantastic. So you really have had that bug since the very beginning.
I really did. I think I've always been the type of person to look for opportunities. I mean,
Yeah.
whether it be a drop shipping company or starting like an Etsy t-shirt selling business in college, or just a social media marketing agency in this digital gold rush age that we're in right now. I've done a lot of different types of businesses, and I think that's one thing that I would impart on anyone wanting to launch their own business and really start in this whole game is just start stuff. Like
Yeah.
some of it's going to work and some of it's not going to work. And you honestly learn more when it doesn't work. And so my advice would be like the path is illuminated by the walking, and you're not going to be able to go and walk that path like and have certainty what's at the end of that tunnel or what's at the end of that path because that's just not how entrepreneurship
Yeah.
works. So that's my biggest thing is just start stuff. You'll just learn so much and
Yeah.
it gives you a lot of stories to talk about too.
Yeah. Yeah. Well, I mean, with how much energy you have and all the businesses that you started, I'm not surprised you couldn't work in corporate world. I'm not surprised at all. So
I
that's great.
liked it. I worked corporate all the way up until really this year is when I left
Yeah.
my job and took real estate full time. I hit that level a while ago, but just
Right.
you get the golden handcuffs and it feels nice. And also
Yeah.
banks, I don't do as much bank debt now, but when I was doing a
Right.
lot of properties with bank debt, they like to see the stable income and everything from
Right.
a W-2. So that was
Of course.
advantageous from a lending perspective as well. But
Right.
now we just raise
With
now we just raise
right.
money. So
With everything that you have going on, I mean, what have been some of the biggest challenges or struggles that you've had to overcome, and how have you overcome them?
I think with a lot of the struggles that I've faced, persistence and resilience has been really how I've overcome all that kind of stuff. Most of the time, I think that problems exist when action's not taken. And so if you're taking a strong amount of action on a lot of things, a lot of times they get better. It's always like my formula is just like effort times iteration. So how long have you been doing the thing? How hard are you working on it? And then how many times are you trying to tweak different variables and improve that? So to me, it's just kind of an equation. Some advice I would give from a general business perspective is you hear a lot of the misconceptions or failure stories about like failure not being an option, or like what if it doesn't work out. And that's my whole thing, is like, don't ever bet more than you can afford to lose, would be one piece. And the other thing is like, your first business, I just told you I've had like 7 over the course of time. Your first business is not likely where you're going to end up, but it might be that stepping stone that helps you get a little bit closer to where you're going to end up. So I think that's a misconception, is like when you start a business it has to succeed. Is like a lot of times like they're not going to. And
Right.
that's okay. Like, you're going to learn a lot through that process, as long as you're not betting more than you can really, afford to lose. So and that's just general financial advice, which I'm sure you're very familiar with. Is like,
Yeah.
stay within your means.
Right.
Another piece I hear a lot, and this is especially common in the real estate investing world, is like needing a lot of money to start. Yeah, a lot of businesses do take a little bit of capital, but you can also launch things really lean and everything too. That's first service-based business I was talking about. I did that off $0 and then $50 investment, and grew that all the way. With my marketing agency, I remember for my softwares alone, and I grew it all off personally cold calling. I was doing like 2+ hours, 3 hours of cold calling myself per day, while working a corporate job. And still, this is actually when I first got into real estate, because I realized I need more
Yeah.
money to buy more properties. I ended up growing that, and it was $72, $73 a month for all my software. So it didn't really require that much
Yeah.
money, just some YouTube videos and a lot of hustle
Right.
associated. So in real estate, misconception is investing locally is the best. At the start of the show, I started talking about different countries that we're doing deals in.
Yeah.
And I think that a lot of people, if you're saying downtown New York City, it's like, yeah, you're going to have a really hard time investing locally. If you're in some country, say like Argentina right now, like you might want to look in investing elsewhere,
Right.
just due to the geopolitical things going on over there. So there's just a lot of different, I guess, things that you can do, but you don't really get in to knowing those type of things unless you get started, which would be my message.
Great. Thanks. Well, let me ask you this. I mean, like I said, you have a lot going on. So if you've been on any of the other or watching the other podcasts, this is my favorite question, because I've struggled with it my entire working career. But with everything you have going on, I mean, how do you maintain work-life balance? And do you even think that it's possible?
I think it is possible. I think that for me, it's not really a concept that I buy into. Um, I believe more in do what you want, and on the flip side of that coin, cause and effect. And so I've always been told by all my colleagues, my family, relationships, everyone in my life, that I work too hard. And I think that's all just preferences and perspectives that are put on us by other people that aren't building the things that we want to build, that aren't living the life that we want to live. And so for me, if I frame it in a way where the work is the thing that is actually most important to me right now, and the things that I'm talking about, I'm pretty fired up about, if you couldn't tell.
Well,
I really enjoy doing those type of things. And I think where that perception comes in is the fact that a lot of people have negative connotations with work. And I don't really view it as that. I view it as like, it's like a cool project that I get to work on. And that's where I derive a lot of my fulfillment out of. And so I think for me, it's just being cautious about the inputs and the way that, people are framing things, and bring that up to me. Because if I were to say it in a different way about your inputs determine your outputs. And so, eat bad food, the body degenerates. Skip sleep, your cognitive function declines. You consume social media and just trivial media and video games and things like that all day, the mind's going to deteriorate as well. And same thing in finances. If you ignore your personal finances, then your financial stability weakens. So it's cause and effect. And I've found that if you work on a noble cause that gives you adequate fulfillment and curiosity, and that opportunity for iteration and getting better at something, you do it for a long enough time period, the effects are worth the requisite pain that you're going to go through to justify the effects that you're going to get from that.
yeah.
So for me, work-life balance is a concept that I don't really buy into, to
Yeah.
summarize.
Yeah, it's certainly something that I have not been able to achieve, and everybody's version of, I mean, everybody's version of work-life balance is different, right?
Mhm.
Some believe in it, some don't believe in it. I believe that it's achievable in certain ways, and so, but I still struggle to find it. But I managed to get to all my son's lacrosse games this year, so that
That's good.
one little piece of work-life balance worked out for me. And
I think
that's
that's the thing,
probably
is
what I was
determining your
looking for.
non-negotiables too, you know?
Right.
Like a non-negotiable for me is I train calisthenics, which is a branch of gymnastics, and I train it pretty competitively. And so for
Yeah.
me, like I'm getting my workout in pretty much every day. Like, that's just, there's a couple days a week that I take a break and everything just to let the body recover. But like that is a huge just stress reliever and get out of
Yeah.
my place and into a completely new space where I can exert myself in a physical dimension. And I find that to be
Yeah.
really helpful. So there's
Yeah.
things like that, one day a week I typically spend with my family as well. And that's pretty much non-negotiable also. So I think it's kind of just penciling those things in. But if I'm at home, man, I would way rather be working on a outbound cold email campaign to source more investors for our next
Yeah.
deal that we're going to be doing than I would be, going and watching a movie or playing a video game. So,
Yeah.
or another form of that. I might go and enjoy a walk or something like that and listen to a
Yeah.
podcast just to like blow off some steam if I'm
Yeah.
really feeling burned out and everything. Also, getting out in nature really helps with that too. But I just think it's knowing yourself, and I've spent the past 29 years getting to know myself pretty well. So
There you go. There you go. Well, you have the right priorities in place. So,
yeah.
do you have a support team either at home or at work that helps keep you on track and keep you motivated, keep you focused?
I think I do. My family is very supportive. Questions me sometimes, but just because they took more of a traditional path, and there's nothing wrong with that. It's just my life decisions have been a little bit different, and so obviously people are going to raise questions on that. It just makes sense. Um, and I think it's also kind of testing me as well, just to
Yeah.
see. But it's also a lot of support and love from that end as well. So I would say, yeah, I have a very good support group around me. It's
Yeah.
it's
I
very
think I
positive.
think I think that's key. I think successful entrepreneurs, successful business owners, they have to have some type of support team to keep them in line, pull them back when necessary, push them forward when necessary. So
Yeah.
so great. So
I think I
within
have a
your
lot of
industry,
intrinsic regulation as well in that, and so
yeah,
it's not something that I feel that I've ever struggled with. Um, but
right.
yeah,
That's good. That's good. So is there a lot of innovation or innovative changes in your industry?
yeah. Real estate's constantly changing. I mean, even in the market environment, how it was a couple of years ago, buy and hold rentals worked really, really well. Airbnb was working really well. And fixing and flipping was working, pretty good too. Everything was pretty much operating with a low
Yeah,
interest rate environment and, a lot of inflationary pressures on the horizon, putting upward pressure on asset valuations. Like, yeah, it was a great time to be in real estate. And so I would say that that has changed significantly, which we saw, almost a triple increase in the interest rate environment in like,
right,
roughly a year. Like they've shot up tremendously. And so
right,
I think that coupled with supply shortages of properties, that's from a couple different reasons. One, we had underbuilding for about 13, 14 years. So when you're not building enough homes, well, eventually that's going to cause a supply shock and you're not going to be able to meet the demand in the marketplace because you just weren't building enough. So that's one. The next thing is when large hedge funds came and bought up all these homes, they effectively took them off the market. So it's not like, Invitation Homes. People think BlackRock bought all these homes. They funded a lot of the operations, but still, it's a lot of the large hedge fund companies that bought
yeah,
up a lot of the houses. And a lot of those are not going to be coming back on market anytime soon. And so that effectively also reduced the supply. And so with affordability rising, or inaffordability, I should say, it's definitely we've had to pivot our strategy a lot. And if you're going the conventional route and you're trying to go and get a mortgage to go and buy a rental property right now, it's tough to find those deals because a lot of people are out
yeah,
there chasing yield and they're not really able to find that with fixed rate debt at the rates that it's currently at and at the valuations that the prices have risen to meet the supply shortage. So we've had to pivot tremendously. A
yeah,
lot of our strategy right now is I actually think that the affordability crisis is not going to get solved by simply building more homes. Because if you go to build a house today, you're looking at, what, 300 grand, like at a minimum, pretty much for that builder to go in, take non-competitive interest rates, go and get the property zoned, permitted, everything like that, go and build on that land. They're looking at a larger build time, which is just
yeah,
opportunity cost and holding cost and everything like that, which holding debt is not cost effective right now to do that. And so you're looking at that going, all right, well, they're not going to sell that thing for anything less than, 350, 400, and a lot of markets, it's significantly more than that. We're talking a little bit more like Cleveland, where, you could probably get away with it a little bit cheaper, but still, I mean, it's just expensive out there.
Yeah.
So a $400,000, $500,000
Hmm.
house, it's not really that affordable. So a lot of what our
Sure.
company's done to pivot is we're looking in low cost markets, Bogota is one of them as well in Colombia, where we can go in, and if I go to do that fix and flip property in Austin, Texas, or Tampa, Florida, man, it's going to cost me $500,000 to go take that thing down,
Right.
renovate it, hold it, all that kind of stuff, and then go and sell it. And, it's like, it's a lot of risk to take on there too. I could take that same amount of capital, and this property that we're looking at in Bogota right now, that I'm raising for, it's 700 million, which is roughly like 170 grand US. And
Yeah.
so, 700 million COP, that's Colombian pesos. And so
Right.
we're looking at these options of, like, even here in Cleveland, the last couple of flips that I've done have been, roughly like we're in for about 150 and we're selling it closer to that 200 range. So you're going to pay agent commissions and everything like that. But hey, there's still a healthy margin there. And a $200,000 house is pretty affordable. $250,000 house, it's a lot more affordable than 500,000.
No.
So I think a lot of it is just really understanding the demand. And if you can find a way to fill it while retaining margin, then you can actually have opportunities that are presented within that market. So that's kind of been our strategy to stay adaptable, and everything is just understanding where the demand is actually coming from. And if it's backed by
Yeah.
strong fundamentals, then we can get pretty comfortable with it.
Yeah.
I actually I'll touch on this because I'm thinking like from a multidisciplinary perspective right now. But if you were an organism in an environment and your goal was to survive, you want to be in an environment where there's low salt concentrations, where there's not crazy swings in temperature. You want to be in a place where your survival is not threatened and you're in a good place. And so those are the conditions that we look for in business. So like I mentioned earlier with New York and skyscrapers and everything like
Yeah.
that, like that's not really a condition that's going to be great for your survival if you're just getting started. And so
Right.
just like if you're going into business, you probably don't really want to be selling newspapers right now, because
Right.
from a biological like fitness perspective, that environment is not creating the conditions for you to survive. And so that's why we're looking at these type of opportunities where I feel like the demand conditions of the market are met, and so we can go in there and it's much easier for us to attain fitness and operating conditions which are accretive to our survival. That's what I would say.
Yeah. Great. So I guess to elaborate a little bit more on that, how do you stay with everything that's going on, all the changes that happen in your industry? How do you stay ahead of your competition?
I think part of it is, I don't know a lot of our competition that's going international. So that's one
Okay.
part of it.
Okay.
Another part of it is, if people are still using a lot of hard money and everything, which is typically like a 12 to 15% interest rate debt on properties, that's one piece that we can get better when we build out systems and things like that and talk to more people about investing with us and into our deals, is we can typically, get them a little bit better, save on some lender fees, and it costs our holding costs down, which makes the deals a little bit more profitable for us. Another one is pursuing creative options. So a lot of what we do in fix and flip, which has given us a competitive edge, and a lot of people don't really even know how to negotiate these things, which has been a huge learning experience for me over the past couple of years and helped us out tremendously, is let's say right now you've got a beautiful house in Solon and Stowe, and you want to end up, you get an amazing opportunity to go to Las Vegas to continue the podcast. Great recording team, great everything out there, lots of opportunity, and it's just something that you just can't turn down. You want to take your family there, and you want to go and move out there. Well, you want to sell your property for say 400 grand right now to someone that you think it's worth 450. And so a fix and flipper or a wholesaler is going to come in and they're not going to be able to pay that price that you are looking for
Right.
your property, because maybe it needs a little bit of work, and they're going to have to go in and they're factoring in, we're going to have to take on all these lender fees. We're going to have to take on all the holding costs. We're going to have to close on the property, which it's just more costs associated. And then when we sell it, we're going to pay closing costs again on the back end. What we could do is we could say, hey, we'll pay you your 450 grand. We'll cut all the fees and we're not going to come out of pocket. We don't even own your property. We'll just get a power of attorney over it. We can go in, renovate the property, and then sell it on the back end. We pay closing costs one time. And
Right.
using a strategy like that, it's called an option or a novation agreement typically. That's a strategy that I feel like not a lot of people are using, and that keeps our capital out of pocket initial outlay like way more significantly reduced than I feel like a lot of the traditional ways that people are currently fixing and flipping houses or doing this type of business.
Yeah, so you're constantly trying to find better ways to do what you do, where a lot of people just sit back on doing it the same way over and over again.
Uh,
So
the
always
environment's gotten
always
harder, and
innovating.
so
It is.
going back to the multidisciplinary like
Yeah.
organism thing, it's like,
Yeah.
well, an organism's typically going to be stronger if it has to survive a stressful environment. If it
Yeah.
has to deal with higher salt concentrations and it has to deal with rising and reducing temperatures and everything like that, like it's
Yeah.
going to have to adapt to survive, or it dies off. And that's a very like harsh reality of being in business. Is like it's not always fun and games. Like sometimes you're gonna have to do that, but also at the end, when you look back, that's the fun and games that you had to go through to become who you are now. So
Yeah.
that's like been a really fun thing for me. And how I've mentally framed that is like when times get tough, it's like good because there's not a lot of people that I feel like are strong enough to weather that storm. And if they
Right.
are, then the whole market's going to get more competitive and even better and stronger anyway, which is an environment
Yeah.
that I'm happy to compete in after a couple of years. Because trust me, when
Yeah.
you're first getting started, you want to find the easiest conditions possible.
Right. Right. Of
We're
course.
still looking for them, but it's good to know that we've got some tools in our back pocket as well to
Yeah.
some tricks and things like that we could pull
Yeah.
out and try to get more deals across the line. And also, it's really advantageous and helpful for the homeowners too. So I feel like we hold a strong moral and ethical code on that kind of stuff as well. It's like who doesn't like
Yeah.
getting paid more money? So
Exactly. Well, it's true what they say, the strong survive. So,
yes,
where
it's
do
true.
you where do you see your business in the next 12 to 36 months? And what challenges are lying ahead for you?
We always have a chicken and the egg problem, and that's something that I'd like to get over. So what I mean by that is being in the business of real estate investing, we've got, deals will come in and then we'll need to kind of like rush to go and get like the funding for them. And then because we do a lot of private. And so getting that funded is like, okay, cool. Now, that's the challenge I'm facing currently in the business is capital raising right now. And that just became a problem in the last couple of days.
Really?
So
Okay.
now I'm like, okay, well, I need to come up with like, about I don't know, 400 or 500 grand in the next week or two to be able to get the deals that I just got in that are really good opportunities that we've been looking for across the line. The other thing is, when we just finished our last couple of deals, it sold off these 5 flips all within the matter of about like a month, and we had a big capital like return basically. All the money came back, and it's like okay, fantastic. And then we're like, well, crap because we were so focused on closing all these things and making sure everything was operating properly and working for our investors and everything like that, that now we actually don't have a strong deal flow. So now we've got to go out and like hunt again. And so I'd like to get into a more of a regular raising cadence and be having more conversations along that. So when I need to, go and raise $500,000, I can make that happen relatively quickly.
Yeah.
Which it still should come relatively quickly, but it's more we don't have a system in place for that. So that's something that I'd like to develop. I'd also like to continue doing properties internationally and expand into a couple different markets. So one that we're looking at right now is Italy as well, and doing more of an Airbnb strategy. So kind of what I was talking about, my market environment conditions. There's different
Right.
conditions in different markets that serve that market well. And
Right.
so in certain parts of Italy where we're looking, there would be more Airbnb opportunities. So that is something in the next 12 months I'd also like to take on is Airbnb in Italy. That's something that's just always kind of been intriguing to me ever since I saw that
Yeah.
they were selling houses for €1 and stuff like that. But there's still a lot of market research and things that we need to do there.
Yeah.
But I'd like to probably in the next 12 to 36 months expand it to at least 2 to 3 more countries other than Bogota as well. And I'd also like to probably help about another like 20 to 30 people do the same thing. Currently, we've helped 90 plus investors do it. And I'd like to get that number, over 100 of people that we've
Right.
helped, buy a property
Yeah.
overseas, or, even in a different state, or, local, even here in Cleveland.
Right.
So, and get into their first real estate deal, because I just think it's fantastic. And it's been my life's calling to demystify and learn a lot of these type of things. And so,
Yeah.
similar to what you're doing with new business owners and entrepreneurs that are getting into the game here with this podcast and showcasing the lessons of other entrepreneurs, I'd like to also do the same thing
Yeah.
for more real estate investors that are getting into it,
Yeah.
because we need a lot of help. If I'm going to build the type of thing that I want to build and go into all these different markets and everything, like, I'm going to need help with it. It's a lot to break down, but plenty of fun to learn.
For sure. Listen, I see you being able to do it. You have a heck of a drive. So
thanks, Joe.
I look forward to hearing how things go over the next couple of years. So what's a couple of final questions? What's the best business advice anybody's ever given you?
I can say the best real estate advice that anyone's ever given me.
Sure.
Best business advice. I'll give you both. I would say kind of like do whatever you have to do to get around the people that are playing the game on a scale that are bigger than you. If you have to work for free, if you have to pay to get in, if you have to work and mentor and shadow and all that kind of stuff to do it, like if you got to travel across the nation to do it, like you have to be in the room with people that know, is my biggest piece of advice. It's been the biggest thing that's helped me in my career, is when you're new and you're just getting started, you just don't know what you don't know, and you don't know a lot. And so getting around people, my entire business operates off of like the network effect. So the more people that we help, it's a flywheel. I mean,
Right.
if I can learn a lot more about how to do a property in Bogota, Colombia, well, then now I can help people out in, a couple other South American countries and everything. And we can go down there and start to like demystify that. Because now I've taken my knowledge like a web and I've just started to expand it. And so every new person that we take on, when we go and do a deal in Bali, Indonesia, well, I didn't know anything about the real estate market over there. I didn't know that you actually can't really buy property. You can only buy it on really leaseholds. And so you don't really technically own it. You just kind of pay to rent it for like 30 years if you're a foreigner. So it still can be a massively profitable cash flow opportunity out there,
Right.
but you're not going to benefit from other wealth drivers in real estate like appreciation and debt pay down, because you're not really technically owning it. So still a great asset to own for a lot of people that could make a lot of sense. But it's just expanding that web. So my advice, great business advice that I would say is just get around people that know. Best real estate advice I've ever gotten is I'll put it in PG terms, because how it was told to me was in R-rated terms. But in PG terms, it was when you go to buy anything, know who's going to buy it someday later. So you always want to know, like, how am I going to get rid of this thing? Is some of the best advice I've ever received in real estate investing. When we go to take on a project, flip, rental property, Airbnb, Walgreens, commercial deal, you got to know who's going to be able to buy the thing at the end of the day. Because at some point in your life, you're not going to own that thing anymore, and somebody else is going to own that thing. And so you got to know how you're going to exit. So having an exit strategy, another great piece of real estate advice, I would say.
That's good advice. Final question. I'll let you out of here. What advice would you personally give to an entrepreneur who's thinking about starting a business and just can't get over the edge to start it, or who's maybe a year or two in and struggling a little bit? What advice would you give to a newbie?
Newbie advice, I would say get started for sure. Get started with something, like identify something, and I would put in an action plan to study 2 to 3 different fields that you're interested in and be a sponge. Absorb as much as you possibly can. Books, podcasts, YouTube, have it in your earbuds all day. Just listen to different stuff and give yourself about a week or two of doing that with 2, 3 different concepts. Cram it all into a week or two and just download information for the first week or two. And then from there, pick one and just go like all in on that for 90 days and see how far that you can get. And if you can make $1 in 90 days or something, and then you can find out a way how you're going to scale that, like there's a lot of skills when you're just starting off that you're going to have to learn. And there's just so much that you don't know. And the best thing is just jumping in the deep end and everything. Don't spend money that you don't have. or that you're not going to be able to afford into the business, especially when you're just getting started, because you need to build that trust with yourself, and taking those risks can be, can really put you in a bad spot. So just be careful with that. But for someone that's a year or two in business, I would say diagnose exactly what the bottlenecks of your problem are and work back to find solutions that make that happen. So, for example, if you have um, if you actually have like an operational problem, well, like that's a bigger issue that you've got to deal with from an
Yeah.
operations perspective, and dialing down exactly what point of that structure or that system that you're operating with is breaking down. Is it an employee thing? Is it the fact that you don't have the right standard operating procedures set in place? Is it the training is kind of messed up, and that's why whatever, when you have onboarding and you bring a new client on, like, or a new investor on, or whatever your business is, a new customer, and they're not getting their service delivery, they're not getting their experience fulfilled, like there's an issue with that, and so that needs to be solved.
Yeah.
For many people, it's a client acquisition issue, and so it's like understanding, all right, well, we'd like to make more money. It's like, okay, so would everyone. So how would you go about making more money if everything is operating properly? Well, we need more clients or more customers. Okay, great. Well, what are you currently doing to get that? And then working back from that problem to find exactly, all right, well, what are the options that we have at our available based on the resources that we have, that we could go out there and do that we think that would work. And then you can start to set up tests and go and run tests on different things. So entrepreneurship 101 is use what you got. And economics 101 is like, there's no such thing as a free lunch. So, at some point you got to use what you got, and you got to realize that, no one's really coming to save you, and you're going to pay for it. You're going to pay in time, you're going to pay in energy, you're going to pay in effort, you're going to pay in money. And we all pay with the resource that we value least.
Hey, listen, great advice, and listen, I really appreciate you taking time to be on the podcast. Josh, if somebody wants to get a hold of you in Prodigal Group, how can they get a hold of you?
Yeah, so I'm available and very active on pretty much every social media platform. My handle is Joshua Hawman. That's JOSHUAHAUMAN. Instagram, TikTok, YouTube, Facebook, LinkedIn, all of it's Joshua Hawman. And then, or you can go to josh@prodigaldevelopments.com.
Great. Once again, I really appreciate you being here. Thanks to everybody out there listening, and we'll catch you on the next episode of Mastering the Numbers.
You've just experienced another insightful episode of Mastering the Numbers. We hope you enjoyed the journey and gained valuable insights to fuel your financial success. Don't forget to subscribe to Mastering the Numbers on your favorite podcast platform to never miss an episode, and be sure to leave us a review to let us know how we're doing. Until next time, keep pushing forward and let your entrepreneurial spirit soar. Thank you for listening.